प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the headlines tonight. Sensex slips for the fourth day ahead of the decision by US Fed on interest rates, down over 300 points, Nifty below 17,250, dragged by realty, IT and metal stocks. Rupee falls to its lowest level in 20 months, closes at 76.23 against the dollar, down 37 paise on fears of US Fed winding down its stimulus measures. Cabinet clears 76,000 crore rupee PLI scheme for semiconductors, 20 chip units to be set up in the next 6 years, billions of dollars expected in revenue. Paytm crashes 13% in trade as the lock-in period of its anchor investor ends. Stock down more than 27% since listing on the 18th of November. The cryptocurrency bill not taken up in the Union Cabinet meet today. With just a week to go for the winter session of Parliament, chances recede of this long-pending policy making it to this session. Markets continue to go downhill, falling for a fourth straight day. Nervousness ahead of the FOMC meeting outcome and increasing warning calls from WHO against the new strain of the virus, keeping investors on the sidelines. Sensex slipping over 300 points and tumbling from Mount 58,000 after falling 115 points, and Nifty barely holding on to 17,200. The key benchmarks continue to drift lower. Weakness in financials, FMCG shares, top laggards also including Bajaj Twins, ITC, Adani Port and Power Grid. Some gains and auto majors lending support to the markets. Maruti, M&M, Kotak Bank, Sun Pharma, some of the names on the gainers list today. After a dismal debut on the Lal Street, Paytm continues to be under pressure. With the mandatory anchor lock-in period ending today, the stock tumbled in trade. While it kicked off the session with a sharp fall of 13%, the stock was able to pare some losses to end with a 7% cut. Paytm's shares have crashed more than 27% since listing and have not been able to touch its IPO price band as yet. Paytm's shares have seen selling pressure since the listing due to high valuations. The stock has logged losses for 14 of the 18 sessions since debut. Amid a continued shortage of semiconductors, the centre today cleared a 76,000 crore rupee incentive scheme for semiconductors. The government aims to make the country a hub for electronics. Under the scheme, India will set up more than 20 semiconductors, design, manufacturing these units over the next 6 years. Take a look at the fine print of the scheme.
Car companies unable to manufacture cars, finding it impossible to meet consumer demand, all due to semiconductor shortage. Mobile handset giants cutting their production targets due to a chip crunch. Even companies dealing in medical equipment unable to meet hospital demands. 2 days after his holy dip in Varanasi, Prime Minister Narendra Modi and his cabinet approved a mega 76,000 crore rupee Make India Atmanirbhar plan in the area of the all-important semiconductors. Under the incentive scheme, 20 semiconductor design, components and manufacturing and display fabrication units will be set up in the next 6 years. A direct investment of 1,66,000 crore rupees is expected along with 1,33,000 new jobs. It will result in production worth 9.5 lakh crore rupees with over 5 lakh crores in exports.
50% of the entire design expenditure will be borne by Government of India under this program DLI. जब deployment होगा, तब deployment की जो sales का value आएगा, उस पे 6% incentive दिया जाएगा.
In trying to lure the international semiconductor giants, India is up against several other countries who are offering their own incentives. To make India's case stronger, the government has tapped into India's human resources pool and announced a C2S, Chips to Startup program that will train manpower.
85,000 BTech, MTech, PhD इंजीनियर्स को तैयार किया जाएगा इस प्रोग्राम में। देश में पूरा का पूरा इकोसिस्टम हाई क्वालिटी जॉब्स के साथ वेल ट्रेन्ड एक टैलेंट पूल तैयार हो, ऐसी 20 साल तक की कल्पना आज माननीय प्रधानमंत्री जी ने अप्रूव की।
The incentive scheme adds to the existing electronics sector PLI, ballooning it to a whopping 2.3 lakh crores. The cabinet has also decided to reactivate the Mohali-based semiconductor facility set up in the 1980s. Bureau Report, Business Today TV.
Dr. Ajay Chaudhary, founder HCL, former chairman HCL Infosystems, also joining us now. Dr. Chaudhary, great to have you with us. We've all been seeing the impact the shortage has had on the ecosystem. How significant do you feel some of these incentives will be?
You see, I think I have personally waited for this from 2009 when I wrote the first report to the government to recommend that we must have a semiconductor plant in India. Finally, it's happened. And I think what I see in the announcement till now is that's a very, very comprehensive announcement. It is not just putting up a couple of semiconductor plants. So I think what is very interesting to see is that the government has realized that just putting up a semiconductor plant is not good enough. What is required is that there should be depth in manufacturing. Right. And therefore, products must be designed in India, and they have incentivized design as part of this whole strategy to create a semiconductor ecosystem. So in addition to the PLI scheme, which was a production-led incentive scheme for electronics manufacturing, they have today announced a DLI scheme, which is a design-led incentive scheme. So what does that mean? What that means is that if you design chips in India, you design products in India, then you will get a special incentive. 50% of what it costs you will be paid by the government. And if you manufacture that product also as you design, then if you manufacture it in large quantities, you will also get a special incentive of between 4 to 6% for manufacturing those products in India. Okay. So I think that's what makes this a very, very comprehensive package.
Do you also feel it's a futuristic package, Dr. Chaudhary? It's sustainable because some of these changes take time. They take almost 20 years to really implement and grow and develop.
You're right in some manners, but you see, what's happened is that it will take us at least 4 to 5 years to have our first large semiconductor plant. Okay. So as a step up to that, what the government has announced is that they will upgrade the existing semiconductor laboratory, SCL, that is there in Mohali, and bring it up to speed pretty soon, probably in the next 6 to 12 months in terms of upgrading it. So for example, you look at a chip which could be designed as a driver chip for the LED bulbs in India. Now, India manufactures 60 crore LED bulbs. Now, all the chips for this come from China. Now, if we can design this chip, and designing this chip is not a big deal, you can design it in 3 to 6 months, we can actually give this chip for manufacturing to SCL. And if they upgrade SCL, we already can fill up the full capacity of SCL with just this one chip. So I think there will be a intermediate step of getting the semiconductor complex going. And thirdly, what they're also working on is this whole strategy of starting up packaging units, which are called ATMP. So if you have an ATMP unit, which can be set up in flat 6 to 12 months, or maybe 18 months, you will also have a packaging capability done in India. So in the initial stage, if you design in India and you design a chip, you can send it to make a wafer abroad, bring back that wafer, get it packaged in India in the ATMP facility and get going. So that is second interim step. And the third final step will be finally 4 to 5 years later, we will have our own wafers being produced in our own semiconductor facility.
Sure. Dr. Chaudhary, which sector, according to you, needs the most attention and investment within this?
Very tough question, because frankly, you tell me which part of the country, which part of any sector can do without electronics. Every product has electronics. You take the automotive sector. Today, there will be at least 500 to 700 chips in every car, maybe 1,000 chips. They just can't do without electronics. They can't do without chips. So this is where the challenge is, that you will have a requirement of this kind in every product in India. And I can't really point out any specific area, but all I can say is that computing will benefit, and smart meters will benefit. As I said, the bulbs that are made will benefit, and so on.
In a big move toward encouraging digital payments in rural areas, the Union Cabinet has approved an incentive scheme to encourage digital transactions of small amounts. The scheme will reimburse banks with an amount equal to the commission they charge traders and shopkeepers on digital transactions. The reimbursement is eligible only for small RuPay and Beam payments of up to 2,000 rupees. The financial outlay for the scheme for a year is 1,300 crore rupees. On to a Business Today TV exclusive. In a crucial move, the core group of secretaries will meet on Thursday to decide the road ahead for the central government's ambitious asset monetization plan. The group will discuss targets and lay the roadmap to achieve the same for projects across land, road and railways. Remember, the government had in August launched the National Asset Monetization Pipeline to monetize assets worth 6 lakh crore rupees over the next 4 years. Let's head across to Karishma Asudani, who's getting us all these exclusive details. Karishma, take us through some of these plans and really what the government's looking to achieve here.
Well, right, these exercises of important meetings is only going to escalate with the budget around the corner, and tomorrow's meeting by Cabinet Secretary is going to be equally important. It's going to discuss its key outlook and its milestones in the asset monetization plan. Like you also mentioned, the 6 lakh crore NIP target that FM has already set. Now government is looking to set certain timelines for it in order to be announced in the budget. We know that a set of airports, few government-owned hotels and, of course, a lot of infra pipelines are under the asset monetization plan, which is being headed also by Niti Aayog and the core group of secretaries, who will take some key decisions in tomorrow's meeting.
Great, Karishma. Thanks so much for joining us and taking us through some of those important details on what to watch out for. TVS Motor and BMW Motorrad have announced they're extending and expanding their long-term partnership with the joint development of new platforms and future technologies. Their plans also include electric vehicles. The first product through this cooperation will be showcased in the next 24 months. Drone technology company ANRA Technologies and Swiggy launched the first drone delivery trials in India. The trials were conducted under a project awarded by the DGCA and Ministry of Civil Aviation. The trial was described as incident-free. SBI announced that its board had approved offloading 6% of its stake in SBI Funds Management through an IPO. SBI Funds Management is a joint venture between SBI and French fund management company Amundi. SBI said this is subject to regulatory approvals. Markets continue to be volatile, and at a time like this, we suggest some mindful strategies to ensure you're making sound investment decisions. Do send in your queries on the number on your screen, and we'll be answering a select few every Wednesday. Let's kickstart our first question today. Mohammed Ashraf in Mumbai. Let's listen in to which stock in particular Mohammed is exploring.
Hi Udayan, I bought 275 shares of RBL Bank at an average price of 481 in 2017. Do you think it's a good idea to buy more at current levels if I can hold for the next 10 years? For your information, I also own HDFC Bank, Kotak Bank, and IndusInd Bank shares as well. Thank you.
Well, Ashraf, I think the other banks in your portfolio probably will give you more joy than RBL, because as you know, RBL's not done very well over the last 3 or 4 years. You are sitting on losses yourself, and substantial losses at that. I'm actually not a very big fan of small private sector banks. I know people buy them in the hope that they will become big one day and they will return or create the kind of wealth that HDFC and Kotak Bank have created. But if you look at the track record of these companies, I mean, whether it's RBL or Federal Bank or DCB or Karur Vysya, they've only flattered to deceive. And I don't see anything changing meaningfully in the medium term. You can say that RBL is cheap in terms of valuations. It probably trades at what, 0.8, 0.9 times book, which is for a private sector bank quite inexpensive. But that's just one part of the story. Their asset quality is still tricky. There are still fairly significant slippages on their MFI and their retail book. And I'm not convinced that the management has got its act together compared to some of the larger private sector banks. So if I had to own financials, I would say that if you already own the good public private sector banks, you could consider buying some of the best NBFCs, best in class NBFCs, particularly the ones which are focused on individual niches. They seem to have very good value right now. And at this kind of valuation, you can even consider the top 2 public sector banks. But I would probably not advise you holding on to some of these smaller private banks for a 10-year horizon. I think there are better picks out there.
Krishanu Mehti also writing in from Kolkata. He's got an investment in L&T Tech, and I'll let him explain the nature of his query.
Hi Udayan, I am holding 25 shares of L&T Technology Services at an average price of rupees 2,500. As a long-term investor, I am very optimistic about its business model. What is your view? Krishanu Mehti, Kolkata.
No, well, it's an excellent stock, and you've bought in at a very good price point. You've already doubled your investment, and there is nothing to suggest that you should be changing your strategy on this name. It's a very good management, excellent pedigree of parentage, very strong hold in the infrastructure, industrial, engineering, industrial and digital domains, and no wonder that they're growing faster than the best companies in the Indian IT services space. I think the management is already guiding to 20% plus revenue growth year on year, which is excellent, which means their profits will probably be growing at 30% plus over the next 3 years if you take an average. And that's better than most of the frontline IT companies. The only argument against L&T Tech is, as you would agree, is that the stock has become quite expensive now. I mean, trading at 40-45 P multiple, which is what, 60% premium to even the Infosys and TCSs of the world. Of course, it's growing faster as well. But you know, you've gotten at a great price point. You don't need to worry about the valuations therefore. And if you can take some consolidation in the share price in your stride over the next few quarters, I think you should be fine in the long term.
Okay, I also like the fact that so many of our queries today are for the long term, and that's really what we encourage. B.R. Bhatia also from New Delhi is looking at sequence science. Let's listen in to this query, and you know, a lot of questions on whether or not some of these are the right investments or one should be looking at alternative choices. Listen into this particular question.
Mr. Udayan, I've got Sequent Science shares at the rate of rupees 300. I'm holding it say for the last 2-3 months. Could I hold it further or should I book loss or switch to any other shares if you can suggest something? Thank you.
Well, you've gotten at a high price point. You know, the entry price is not great for you because, you know, the stock had gone up quite a lot, Sequent Scientific, from 100 to 300. You bought at the top end. I mean, I think you went up to or topped out at 325, 330. And then the stock has come off to about 175, 180 levels. So you've lost quite a bit. I mean, you're sitting on significant losses out there. I think the correction is a factor of how quickly Sequent had gone up, because it seems like a good company. As you will know, that it was carved out of Strides Arcolab. Their animal health business became Sequent Scientific, and it has very good parentage now because Carlyle, the private equity player, is the majority shareholder in Sequent. So It's not like it's a bad promoter group or anything like that. Animal health per se is a promising area because growth indicators are good, and Sequent Scientific has presence not just in India but a fairly significant presence in countries like Turkey and in other parts of Europe. Carlyle's presence in the management also will unlock some doors for many other destinations and different product categories. So per se there is nothing wrong with Sequent Scientific really. The business is good, and I think the price needs to consolidate, and I would probably be a bit patient and hold out without being too despondent about the losses which have been incurred since you entered the company. Maybe give it some more time, but I admit that it's been a disappointment over the last few months, but maybe give the management a little bit more time.
Okay, we have time for one more. Arjun Jain from Nagpur has M&M, and let's listen in to his query, particularly given the kind of tumult that we've been seeing on some of the auto names.
Hi Udayan, good to see you. I am Arjun Jain from Nagpur. My query is pertaining to M&M, Mahindra and Mahindra. I am holding shares from 2016 at the price of 916, and the shares are approximately 100 shares. Should I hold it, or should I exit? Because if on the compounding basis, it's hardly getting 2% to 3% return. So what is the future of Mahindra and Mahindra?
It's a tricky space out there, and I hand on heart cannot say that you will make a ton of money from M&M in the future from here on. I don't know how this auto space will play out, because it's an excellent management, Mahindra and Mahindra, and the stock is very cheap. I mean, it trades at about what, something like an 11-12p multiple. So there's nothing wrong with the valuations or the management as such. But the space is probably struggling a little bit. I mean, as you can see, that tractor sales are very sluggish over the last few months, and this year will probably be a bit of a washout year for tractors. Sure, on the SUV front, M&M is doing better. I mean, and initial indications of the kind of sales and order pipeline in XUV 700 and Thar are both quite encouraging. So I think the SUV piece is not looking bad. But in the future, to unlock value from M&M, I think they'll have to come up with a really credible EV plan, electric vehicles plan. And on that, we are not terribly clear which way M&M will swing, because that really is where the money will be made going forward in the auto space, not in traditional vehicles. So you can hold on to this stock. I don't think you'll lose a lot of money, particularly because the subsidiaries are very, very valuable in M&M. Of this 900 rupees share price, maybe 300-400 rupees is just coming from the subsidiaries, which is your investments in technology and finance, which M&M has. The rest is the core business, which is the lumpy, tricky one. So I don't know. My guess would be that M&M will probably trade in a bit of a range, not lose too much money, not make too much money in the next year or two.
All right, that's all the time we have on this edition of Ask Udayan. Thank you for sending in your queries, and do tune again next week, where we'll try and take more of your stock-specific queries.